So if anybody like T2108, I always tell people, right? And if T2108 goes below 20, start getting bullish. If it goes below 10, you should be extremely bullish. And if at all it goes into single digit, sell your wife, kids, donkey, horses, whatever it is, and buy the market, you're likely to make money. Guaranteed. So magnitude moves are these moves which are like very, very aggressive, 80, 100%, 200%. They happen in a few days or weeks. These are like meteors which shine brightly for a short period of time, and then they might just kill themselves or whatever might happen. EP is what people know most about, but in reality, EP is least important setup for me today. EP 9 million and DEP, which is delayed reaction EP. These are the two main setups. What is an edge? Edge is just like three ways to make money in the market. Either be first, or be smart, or cheat. When you buy at 358, you are first, you are also smart, and you are also cheating compared to people who do it in the nights. The goal is to remove every in the moment decision, standardize like a factory, have a process flow, have a conveyor belt of ideas coming. I'm not going to chase it. No matter how good the idea, I'm not going to chase, right? And I'm James Bond. Have you seen in a Bond movie, Bond chasing girls or girl chase Bond? I don't chase. I'm going to wait. If I lose, fine. There is always next trade, right? Now this stock on this particular day, there was no news. Even if I had seen the news, it was not gapping up. There was no reason for me to even look at it pre-market or things like that, because it wasn't even gapping up. But this stock traded around 10 million shares. That is when I started researching it. So I bought it on that day based on this thing, and this thing, based on that information, I thought it will make like a 30-40% move. It ended up making that in 7 bars.
All right, welcome back, everybody. It's my pleasure to introduce the next speaker of the TraderLion conference, Pradeep Bonde. He's the founder of Stockbee and the mentor to market wizards. And today he's going to be discussing quite a few concepts, his key trade setups, and how to create a trade factory, and a lot of the nuances that I think most people don't understand about episodic pivots, momentum bursts, and his way of trading. So Pradeep, first of all, thank you so much for being a part of this. Once again, appreciate you taking the time, and looking forward to this. Welcome.
Yeah, sure. Welcome. Thank you.
Yeah, let's dive in.
Yes. So let's start by looking at some of the core things which I look for, and what I am looking for when I am doing my personal trading is I have a clearly defined thing that I want to focus on magnitude moves and not duration moves. So magnitude moves are these moves which are like very, very aggressive, 80, 100%, 200%. They happen in a few days or weeks, and these are like meteors which shine brightly for a short period of time, and then they might just kill themselves or whatever might happen. I'm not looking for duration moves of weeks and months and all, and I have nothing against people who trade that, but that's not my cup of tea, okay? The next thing which is very key to my looking at this, whatever I'm doing every day, I'm looking for situational awareness. That's like absolute must. In fact, and I have some things which somebody has made for me, and which is basically a quote on situational awareness, which says that, look, if you are hitting on girls at a funeral, do you have situational awareness? Okay, so it's like every day morning, I'm trying to answer some of these questions. Are breakouts likely to work? Are breakdowns likely to work? And that's the starting point. So if I don't know whether breakouts are going to work, then nothing is going to happen, right? And that's the thing which is. So situational awareness, extremely important. The more I trade, the more I understand that the key really is situational awareness once you are set up, because the moment you lose situational awareness, drawdowns, breakouts stop working, you get into very frustrated phase. So I only trade with situational awareness. That means there are times when I'm not going to put a trade, or I'm just going to put some few 100 shares or some position just to check the water, and I'm not going to be really excited. There are some absolutes which I have created for myself, which are always buy on a first day of a breakout and as early as possible. Because if you're going to be buying breakouts, the earlier the entry, the better it is. Because if you enter early, by the end of the day, you have a buffer, You can move your stop to break even and the trade is free. If you enter late, your stop is going to be wider. So everything, when I talk about my trade factory, is based on these principles. These are like the foundations for everything. So I like really focus on the first half an hour or 1 hour of the market open, because if I can get in there, then it's all easy. Whenever I'm buying breakouts or anything which I'm doing, like, and if I'm going to buy any stock, I always look for tightness. I want to see 2 tight days or 3 tight days or 4 tight days. And that's like one of the ways in which you can get closer stop, because if a stop is having a very tight action, then the explosion makes sense, buying breakout makes sense. So that's one, or a negative day. I always look for young setups and moves, which is like one of the problems which I see in trading. When I see outside traders and even some of the Stockbee members, they're buying moves which are like in a late. They're buying setups which are like stale. They're buying setups extended. So the more you buy extended setup, it's like you're going to be just not. So we actually have a saying on Stockbee side, be a cougar and go for young things and not like in a date older things, right? And basically, always look for catalyst. This is a new thing which I added more and more now. Even if I'm buying a regular breakout, I always want to find what is the catalyst. It means like, is there a reason why this should go up, right? There are a lot of pretty looking breakouts which happen and you buy and nothing happens because there is no reason why the stock should go up, right? So always look for some catalyst. It may not be a major catalyst. It might be a minor catalyst. It might be a sector. It might be a theme. It might be some recent news. It might be government policy, but something has to be there for this thing to move. That's one thing which I have really added in the recent years to improve the win rate. The second thing which I added also, which is related to this, is whenever I'm buying, I'm always thinking, okay, who's the fool or the next person to whom I can sell this to, right? If I can articulate, look there are these people who will be buying this because it is going to reach this resistance level, or they are going to buy this because they are looking at some sort of a level to buy or things like that, then I can sell to somebody, right? If I cannot articulate and figure out who's be the next set of buyers for this, then I'm the only fool who's buying, right? And this is a greater fool theory, right? We make money by selling to somebody who doesn't understand, or who buys on third day or fourth day, or who follows a newsletter, or who is believes in some buy points which are above your entry points. So that's another thing which I am always, and this is why I track some of these things on Twitter and all other traders, and I look at where are they going to buy, where are they going to get excited about, and then the game is to try and buy before them and sometimes sell it to them, or they come in and the move gets magnified. So that's another thing which I always look at. I always ask this question, okay, look, okay, if I buy this, whom am I going to sell this to, right? And then always look for opportunity to size up. And this is one of the key nowadays, which is the more funds I have to trade, it becomes more difficult to trade these small $3, $5 or some of the other moves. They are very, very attractive and they look very attractive, but I can't size up. So I exclusively focus on more fund quality stocks, and fund quality, I define it as something which is owned by 500 plus funds or 1,000 plus funds. So that way you're buying something, and there are enough opportunities in a fund quality place that I don't have to go into the lower quality. I don't mind, there is a lot of money in this lower capitalization, nano cap, micro cap and small caps, but the problem is you cannot size up, and if I cannot size up, then you cannot move larger amount of sums of money by doing those kind of trading. But yes, for somebody else who has a smaller capital base, that's a very nice opportunity. I also built my capital to where it is by doing those kind of things. But the game has changed for me. Things have changed. Life is different now. So I'm looking for fund quality thing and also sizing up. Really, this thing is, once you're on age, is how much can you size up and where are the opportunity to size up. And that's every day I look for opportunity. Where can I size up? Where can I put big position? Always develop new edges and variations, expand your playbook. Most people outside of Stockbee and all, they think that I am trading EP. EP is the least important setup for me nowadays, right? And I have a variation of EP which I trade, and it gives me more opportunities than EP because I know the age on EP is less and less, and gaps are too high. So I created a variations, and there is no end to creating variations because you cannot depend on one age. Ages deteriorate, ages evolve, ages become too popular, they make entries difficult. So I have variations of EP, which is delayed reaction EP or EP 9 million or some other wages which are not yet in public domain because we don't want the ages to deteriorate. And the one of the things, always study 20% and 50% moves. This is like an absolute rule as far as I'm concerned, because I make money by buying moves which will make 20 or 50% move in a short period of time. So I want to study them obsessively to see how they move and get. So every day I study 20% plus, every day I study 50 stocks which go 50% plus in a short period of time. And this I learned from my previous career, where I worked for advertising for Unilever. Unilever is a market leader in the world in detergent, underarms, deodorants and all. Still today, every day, they catch hold of some 500 people and study how they put, how much deodorant they put in, what happened, and things. They're obsessed. And the reason Unilever tells you when you join Unilever, that the day they stop obsessing about understanding consumer, the game is over because somebody is going to outsmart them. So same way, 20%, 50%, that's like golden standard as far as that. And all my learnings, all setup ideas, entries, exit, everything comes from that study. And then age turnaround and rotation. I believe that real money is in how frequently you can turn around your age. The more frequently you can turn around your age, the more better it is, rather than looking for longer duration ages. So that's the core part of the philosophy for whatever I'm going to go through in terms of my trade factory. Okay, so using the principles which I discussed with you and those foundation ideas, or that is my really my business defined as what I'm trying to do and what are things important to me. What I operate on a daily basis is a trade factory, which is like a daily process flow, which takes all things into consideration. It's a continuous loop. There are things which I do pre-market. There are things I do at the opening. There are things I do at 1:30. There are things I do at 3 o'clock, 3:30, 3:58, and so on and so forth. It's a well thought out trade factory to trade the kind of setups which I want to trade and the ideas which I want to trade. So it's a defined process and set of tools run on a continuous loop designed to consistently find trades. The goal is to remove every in the moment decision, standardize like a factory, have a process flow, have a conveyor belt of ideas coming. When the ideas come in, there is some quality control process, context, there is a set of rules or set of like criteria as a stock needs to meet, and everything is then pre-planned. There is nothing which I am doing which is like on the fly, basically, right? Write trade, the tools, execute the plan, and you just follow the trade factory. Anything which is outside trade factory, I don't even care about. I don't even take a trade. So the trade factory has two conveyor belts or two sections. One is which is home runs and mini home runs. These are the setups which I trade, which can move my account in one trade to 20% or more, or sometimes like even more in terms of it can even move more than 100% in one trade. So these are different quality of ideas, or they have a magnitude which is greater than a normal kind of a magnitude which is going to be possible. So for this, like I say, I trade a set of setups and not just one setup. EP is what people know most about. But in reality, EP is least important setup for me today. EP 9 million and DEP, which is delayed reaction EP. These are the two main setups. Out of that, like really, EP 9 million produces the most returns for me, and DEP, which is a variation of EP 9 million, which produces most setups basically. And I'll go into detail as to what those setups are. But so for these, I run scans. So the scans are EP 9 million and DEP. So EP 9 million is a scan where I look for a stock which has made more than 9 million volume traded for that particular day. DEP is a scan which I run to find stocks which have done that in last 1 month, and then I look for low risk entry on them. And I'll get into details on explaining this whole thinking behind why I'm doing this, what is the logic behind this setup once I go through this particular slide. Now, but I'm not dependent on mini home runs and home runs only, because there is like whenever you're doing this kind of a trading, because of the kind of stocks which are on the way, the kind of moves they make, you need wider stop. You need 8, 10, 20% kind of a stop sometime in order to trade these kind of moves. So I also trade something which I call as singles or base hit, which are like pattern based. This is all catalyst based. This is pattern based. Okay. In this, I'm just looking for a trade which is like going to move my account 0.5% or 5% in one trade. So if I like say buy a breakout, and if it was like say 20% of my account and it goes up 25%, it's going to move overall capital by 5%. Or I bought a stock for 20% and it just went like a 10%, I'm going to make 2%. But I'm happy taking those trades because those singles add up. And they give me the buffer to take a trade with a size here. If I don't do single, I'll never be able to do size. So it's a combination of these two approaches. And they are same thing. Essentially, all of this is breakouts or anticipation. It's just different kind of opportunities or expansion of the edge into different kind of, it's like, and I always tell people on the side saying, look, Coke, Diet Coke, Zero Coke, Orange Coke, Lemon Coke, and if you go worldwide, there are 70 different varieties of Coke. But at the end of the day, it is just water, some flavor, some caffeine, and some coloring, right? And same way, these setup ideas are variation, but they appeal to different kind of market environment, or they give you a different kind of an opportunity to make money. So for this, I have scans like combination bullish and bearish, which I run during the morning sessions. Then I have scans for anticipation, which I run during the afternoon. And I have a reversal bullish as a setup, which is like a setup idea where I look for something which is going to be a reversal. So this is the essence of the trade factory. Trades can come from here, trade can come from here, and then I take those trades. So let's go and look at basically the idea of EP 9 million, because that's like the main thing. I'll start with EP and then I'll go into EP 9 million, because there is a lot of confusion. People don't understand, or they have their own view about this. I just want to clarify things. Okay. Any questions before I go?
No, not yet. I think this is good.
Okay.
Hey everyone, just want to jump in here real quick and let you know that this episode is brought to you by Deepvue, which is the platform I use every single day to find new trading ideas, monitor existing positions, identify new leading themes, and analyze the markets. You guys deserve a platform that keeps innovating and brings you the most up-to-date tools to trade the market. And at Deepvue, almost every single week, we're launching a new feature or system update. Here's what makes Deepvue different. The screener comes loaded with preset screens from actual market wizards and top traders. So you're starting from the setups that the best in the world actually use. And when you're flipping through results, you've got mini charts right there, so you can visually scan through hundreds of stocks all at once. That alone saves me so much time every single week. The charting is built for how we actually trade. Multiple timeframes, unlimited indicators included anchor VWAP, enhanced volume, custom indicators like RMV, and the built-in RS rating. You've got custom dashboards to track the market, themes, and real-time sector rotation, so you always know where the money's flowing. Best yet, we just launched the Deepvue AI terminal, which brings all your research into Deepvue with easy-to-use preset prompts or your own custom ones. You can even identify gap catalysts with just a right click. We set up an exclusive offer of 1 free month for all TraderLion podcast listeners. So to activate your trial today, check out the link down below in the description or visit deepvue.com/podcast. That's deepvue.com/podcast. And with that, let's get back to the interview.
So let's go back to this, what I like to do, use here, right? And so let's like kind of create a fresh slide and let's try and do this this way, right? And so there is EP, there is EP 9 million, and then there is the delayed reaction EP, right? And basically, and then I have some other variation which I don't want to get into because the age might erode, so we don't want to talk about it. But EP is a catalyst based trade, and on a neglected stock, and by definition, it is a gap. So let me give you an example of an EP which I traded this year at the beginning of the year, and that was, let's go to this. Okay, CRCL. Okay, so here Circle IPO'd, it went into a long period of neglect, nothing was happening, and this is the day when there was a catalyst, and from this catalyst, which was a earnings as a catalyst and all, and then the stock made a move up around 81%, and it made that move in just 15 bars, right? I didn't trade Circle itself. I used the ETF, which is CRCA, to magnify my returns on this particular trade. So CRCA, which is like so that made 70%, this made 206%. So I use, nowadays, if there is a substitute, I use that particular thing. Now, in this particular case, there was a clearly identifiable catalyst, which was earnings. Earnings was blowout. The stock met my conditions of EP, which is like it should be neglected. There should be a massive earning acceleration or some catalyst. And then the stock exploded in this particular case because I had identified EPs as a trade are identified pre-market, right? Because they are based on gap, they are based on catalyst. I knew this pre-market that this is stock is gapping up, and what is the catalyst, right? So this particular stock made a big, like because I took circa, I made like a lot more. And so here I entered early first thing in the morning as an what is called as an opening guarantee price OPG order, and then subsequently like and it kept on going up kind of a thing. So this is a kind of a trade where I research a stock pre-market. I go through a certain criteria which I have, which is like it should have a massive catalyst, acceleration in sales or acceleration in earnings or some theme or something like that. But it's very clear before I enter this that this is a gap and there is a catalyst, and this is like, okay, fine, this is like something which is I can identify, the information is there to identify this particular thing, and I can enter based on that. That's EP. That's like I say something where there's a clearly identifiable and it's a gap. Now, EP 9 million is a very different idea, and in order to understand this, so if anybody, if you have any questions on this, the way I do it is like there is this set of criteria which I have, which is Magna 53, cap 10 by 10, which is like a qualifying criteria, which I use to qualify an idea. So in the morning, if I get an idea, I look at whether it has a massive acceleration or a massive catalyst, that is MA. G, whether it is gapping up. N, whether it is neglected. And neglect can be in various forms. It can be a price neglect, it can be analyst neglect, it can be a earnings neglect, fund neglect, blah blah blah, news neglect and all. And 5 is it should have 5 days plus kind of a short interest. But this is not essential. This is good to have because it makes the move more explosive. And 3 is 3 plus analyst raising their price target. And then capitalization below 10 billion and IPO below 10. If that is there, that adds more to the explosiveness of this thing. When I go through this and I research, and nowadays research has become very easy because I use Gemini, I use Grok, or one of the AI kind of a tools. So I try and figure out for every EP which I buy, I figure out what is likely move that it is going to make. So when I looked at this, I said like based on the all the information which is in front of me, this is going to make 50 to 100% more, right? And that is based on years of experience studying things like this and all, and that stock ended up making that kind of a move in pretty fast, right? And this is what is a magnitude move is all about, right? And it made that move of like 70% in just like 14, 15 days. And this is what I call magnitude moves, which are like they are not designed for duration. If I kept holding this trade, I would be like not be even making money on that, right? So this is just for magnitude. Now, so this is the thing with this kind of a catalyst based kind of a trade is the frequency with which this happens is very low. You get one trade, and after that, the next trade might come in after like 1 month, 2 months, 3 months. In a year, you're likely to find only 3 to 10 trades like this. Unfortunately, I can't run my life and my thing with 3 to 10 trades, even though they are very explosive. I made good money on this trade. Really, like it was a banger. Came out in the beginning of the year, first month of like it was in January or something, right? And so it just like or in the beginning first quarter, so it made like a good this thing. But I cannot depend on this because the next trade comes in very infrequently. So frequency is an issue. So this is why I trade this if it happens. Like just yesterday there was another EP which happened, which was BFLY, Butterfly Network. You see. It had this catalyst, AI, mid-journey, and it like showed up, gapped up, had some sort of a thematic catalyst or risk catalyst theme AI, which is a big theme nowadays, right? So, but it doesn't happen frequently. So how do you solve that problem of frequency? So I created this setup idea called EP9 million. And when people hear about EP9 million, they are like, they dismiss it, and which is very good because I 100% agree with them that there is nothing in it and they should not pay attention to it, and this is just stupidity because that's exactly what it is. Okay, it's very good if people don't understand ideas and they don't get excited with it because that's where the age is, right? Basically, but here is my logic and thinking. This idea started by reverse engineering when I looked at EPs and when I looked at 50% plus moves. There are a lot of stocks which are making this 50, 100, 200, 300% move, but you could not identify them by just EP or catalyst because this was not apparent. So, to me, EP 9 million is a scan based setup, while AP is a news based setup, while this is scan based and most of the time non gap setup. And I'll show you an example and you'll understand much better, right? Now, here is a trade which I did a couple of months ago or a couple of weeks ago, Sweet Green, right? Now, this stock on this particular day is, there was no news. Even if I had seen the news, it was not gapping up. There was no reason for me to even look at it pre-market or things like that because it wasn't even gapping up. But this stock traded around 10 million shares. That is when I started researching it, and I found out that they have a new product, new wrap, new CEO, and as a result of that, like on social media and all, people are growing crazy about this thing. So I bought it on that day based on this thing, and this thing based on that information, I thought it will make like a 30-40% move, and the trade it ended up making that in 7 bars. Another trade which I did, which is again an example of EP 9 million, which I would have never found using my framework of EP, was this NFS couple of weeks ago. Like again, this was gapping up like not even like 1% or 2%. So it's not even something which I even noticed in pre-market. Even though I saw some news item about NFS, it wasn't gapping up 5-10% for me to get excited. Then I saw it here in my scan. Then I started researching. They had a new product, right? I said like, okay, researched. That new product has something to do with like an AI and the data centers and things like that. So I said like, this makes sense. And now this stock went up 88% in some 10 bars. I would have never found this trade using the EP logic, but my different setup idea finds this trade, and that is exactly what. So as a result, what I would find 3 to 10 opportunities, I am able to find 300 to 500 opportunities. Most of the time, it's my limitation in terms of capital or like how many ideas can I take in a day kind of a thing, which limits the number of ideas which I can get into. So let's see the logic of EP 9 million, which is like derived from doing some going through hundreds of examples of stock which made big moves, like this NFS kind of a thing. Currently in the US market, there are, so say how many stocks are trading in the US market? There are 6,500 stocks trading in the US market. Okay. There are 6,000 ETFs which are trading in the US market, approximately. I just rounded up, right? And there are around, say, around 400. So let's round it up to 500 ADRs which are trading in the US market. So added together, you're looking at total of around 13,000 stocks or ETFs or ADR which are trading in the market on any given day. Right? Out of these 13,000 which are trading, when I look for my scan condition, which is looking for stock which have traded volume of more than 9 million shares on any given day, you get only around 200 to 250, or that is like out of this 1300, 2% of the stocks, and most of the days it's not even 250, it's less than 250. So less than 2% of the stocks trade this kind of a volume. Now, okay, there are stocks which trade that kind of a volume every day, but NFS never trades that kind of, or what I am saying is that these are the stocks which for whatever reason on that day traded in terms of total volume traded, the top 2% of all the stocks trading in that particular or ETF trading in that thing. So I want to know, if a stock is trading that much, why is it doing that? There must be some reason, I don't know, right? There must be like, there is always something there, or like there must be a thing. And then all that I do is, then I investigate, and if I find a good enough reason, I go into that particular trade, and it finds you so many trades which make 20%, 40%, 50%, sometimes 300% move, which you would never find by using this framework. So what it does is it expands your edge into like and then the theory of edge rotation and things like that comes into place. So this is able to find things which I would never find using, like I will give another example, and I have hundreds of examples because this happens so frequently, and I don't even depend on this nowadays. If it comes in, good. If it doesn't come in, I am not worried. If I don't trade a EP ever again in my life, I am perfectly okay. There is no problem. There is still so much opportunity in the market, right? On that day, a couple of weeks ago, I saw all these stocks having EP 9 million, right? And a DAL is showing up in my scan, right? And that day, all these airlines were showing up. So there was information here, right? And AL, DAL, UL, all of them are trading. They don't trade that kind of a volume, right? And then they are trading in the 2%. All that I did is like, I bought every single airline stock which was meeting my criteria. That day I bought like AL, UL, DAL, because I just was not sure which one, Love, right? All of the Love didn't have EP 9 million. It had like almost like 7.9 million. It missed by that. All of them. So it was very clear, and I have seen this multiple times. When a sector is about to start a move or a new theme is about to show up, it shows up with volume. And the other question one has to ask is, if something is attracting this kind of a volume, who's buying it? Because most people don't even pay attention, but this is institutional footprint, right? This is very clear. On that day, institutions were getting into these airlines. And so, like if you see JetBlue, every one of them was having this EP 9 million. And I just I ran my scan, I saw them. Yeah, and all of them went on and made 20% in 3 to 5 days. And that's how this EP 9 million as an idea is. So there is a variation which I created of EP 9 million now, because a lot of time, by the time I research and identify, sometimes they have run up too much, or sometimes there is a stock which is a catalyst, but it gaps up too much. And I don't want to chase gaps. And I did that early in my career when I was an idiot, or when I didn't have enough information, or I didn't understand. So I was taking gaps of 30, 40%. I don't want to chase gaps now, right? So if there is something which has a EP and it gaps up too much, I just wait for it to set up as a DEP. Here, this stock gaps up, and it gaps up like some 53%. I'm not going to chase a 53% gap. I'm done chasing that. At some stage, I used to chase these things. I waited, and then this is showing up in my scan, EP 9 million also. I know what is the catalyst. I know there is a genuine catalyst, and I waited, and I entered on this day. And then the stock still made 87%. And I would have got stopped out if I had bought on this day, right? Which is what happened to many people. Or there is another stock which is a very good trade, and I could do it with size because it was the institutional quality stock which I did, which is a DEP. Here, GLW comes out with earnings. Earnings is blowout, right? And it gaps up. And then I looked at it showed up in my EP 9 million scan. I looked at the volume. Volume was one of the 2 years, 3-year high volume, and things like it's an institutional quality stock owned by thousands of mutual fund and all. So, and then it had this kind of a thing. So this is where I was, so for a DEP, which is just a variation of that EP 9 million, I wait for some sort of a orderly pullback. I wait for some sort of a thing like this. So this is where I was and I put it in a watch list. Next day morning, when it started breaking out, I was there within in the first 5 minutes as soon as it started breaking out, because I had done research. I knew this I'm going to buy. And I had don't even ask how much size I had, because the stop was so close, right? Because you're literally sitting there like a hawk watching this, and this is, you get it in the first 1%, 2% of a move, you just load it, and then the stock made a move of around 43% in 10 days or 15 days or 18 bars, right? Basically. So this is the framework for EP 9 million and DEP, which is basically I'm looking at the non-gap or the things which I could not find EP. And there are more these kind of opportunities in the market in my studies and in reality than these opportunities. So this has become my primary setup. And this is basically, DEP is just a variation of that. Or for a DEP, what I look for is something which did EP 9 million in last 1 month, and then I wait for a better entry, very low risk entry on it. Like, just to give you an example from yesterday, this Octa, which had a here, okay, this is where yesterday is when I bought it, because it was in my watch list. I was watching it after a pullback, and again this was EP 9 million, so I can qualify it and do things like this, right? So that is the logic behind this particular setup idea, which is to focus on stocks which trade in the top 2% volume on that particular day, and find out why, what is the reason, and especially if they're non-gap kind of a thing, and then use that information to make a trade and then go into it. So that's the thing basically, right? And so even though people say, oh, there's no magic, is you're just scanning for, yeah, okay. I want people to continue to believe that way, because the less people understand, the setup will continue to work, right? So that's the thing which is on EP 9 million and this thing. So let's go back to our trade factory and see. So this is to find home runs and mini home runs, and I have some variation of these which I don't want to talk about, because we don't want to give out all the H's, right? And basically, now on this side it is a very different thing. This is just a pattern based, and everything here is catalyst based. So I researched on that day what was the catalyst for sweet green, or I researched what was the catalyst for NFAs, or anything which shows up there. I'm going to go and research, and if there is a valid reason, and that goes back to the original first slide which I showed you, always find a reason for a trade. And when I find a reason, like on that day when those airlines, there was an apparent reason, right? The Iran thing was getting sorted, or there was a rumor of Iran getting sorted. So you always, when that volume happens, I'm always looking at what is the reason, and if there is a good enough reason, then I go into it. And many times it allows you to do a large size. That's the advantage of doing this. And then singles is just a pattern based trade. Something shows up and it's a very good, like in a low risk entry point, or something which is like this is a brainless activity. You just need to learn the pattern and do this day in and day out. I'll show you an example of this also, as something which is called a momentum burst, which is a 3 to 5 days move in which stocks make 8 to 20%. If they are lower price, they will make even 40-50% move. Is like very simple kind of a trading this is. So here you look at this particular thing, right? And here. So on this particular day, I run anticipation scan also, which is looking for this kind of patterns. So this was like showing up like this, and next day it breaks out like this. I don't even know what this company does. I do know what this company does, but just a continuation momentum burst, that there is a momentum, the first leg, but I do have a qualifier. Everything has a qualifier and context. So for this particular setup, which is what we call as the momentum burst, my qualifiers are if I'm going to be buying this as a continuation setup, which this was, the first leg should be 15% plus. Right? The first leg should be linear, orderly. The pullback or the consolidation should be less than 10 days. Ideally, between 3 to 7 days works best. So in this particular case, this was a 6-day consolidation. And during the consolidation, you should see series of tight bars, which is like 3 tight bars or 2 tight bars. At least minimum 2 to 3 is better, and sometimes 4, 5. And then the stock should break out, and then volume should close near high. Now these are trades which are just go up for 3 to 5 days. So in this kind of a trade, I buy it on this day, I sell it by 3rd or 4th day, 80% I'll sell. I'll just keep a runner 20%, move my stop to here. And in case it makes more, it's okay. If it doesn't, I am fine, right? And I made my money. And this might look like a small move to people, but like in 3 days, the stock made 18%. So it still moves your account, right? And 18% in 4 days, if I can do this 100 times in a year, 300 times, and I don't need to find one long move, right? And let others chase long. So this is an example of this. This is also an example of what is called as continuation setup or thing, which is like anticipation setup. So I scan for this, and then I look for this. So if I find something like this, I'll put it either in a watch list, or I enter this at around before market close. I do this work at around 3 o'clock, and I enter this at around 3:58. So that's an anticipation setup. Now let's look at an example of a reversal bullish, right? And I think Nova here might be an example here. So this is like this is what is a reversal bullish kind of a thing. So I have a scan which looks for reversal bullish. So on this particular day, if you see, it showed up in my scan. These are all scan based, right? And there is not much of a brain involved, just a qualifier. So this showed up in a scan on that day. It's a reversal bullish setup, right? And which is just an exhaustion. So there was a selling, and selling exhausted. So it closed near high, right? And it's an exhaustion setup, I call it like, and minor exhaustion. There can be major exhaustion, minor exhaustion. In the context of where this stock is, it has some catalyst and all. This was a pullback, and then so you buy this just before the close. I run this scan at around 3 o'clock, 3:30, and then whatever shows up, I buy. And this is what happened next day, right? Stocks make 11% in one day. Just what is my risk? Hardly anything, because I bought it at 3:58. Put a stop at half of this day, and next day it just just goes and makes 13-14%. You sell them in 2 or 3. In fact, I sold 80% on that day, because 13% move, there is no way I'm going to let it go like that, right? And that's way beyond what I was expecting on that kind of trade, and that's the end of the thing. These are just pattern based singles. You move your account 0.5%, 1%, but thousands of trades add up kind of a thing, basically, right? So
is that typical for your sorry to jump in. Is it typical to put your is it typical to place your stop at the half day point? That's your typical thing for anticipation reversal bullish setup?
For anticipation, I might have a slightly like an stop might be like an essay, but the anticipation setup which I focus on are they are like up or down less than 1%, and most of the one which
Yep.
I select are like even up or down less than 0.4%. So my stop is around 1%. So even though the stop is not, so if they just like explode, sometimes if it is a high price stock, and I have had cases where the stock is priced at $300 and it is up or down 20 cents, and then I buy it and put a $1 stop, and next day it goes up 18, $19. So it's just very short term free money kind of a trade, right? Basically. And I have
But
more
for reversal
examples which I'll
bullish,
show you later of
yeah.
these kind of things. Yeah.
Yep. So, but for the reversal bullish, where it's a little bit more of a washout, you typically do
I
like half
define it as an
that day's
exhaustion
range.
setup. So there has to be some sort of a washout. There has to be some sort of a selling cascade, 2 or 3 days selling cascade, and then there is a reversal bar. That reversal bar in NOVC, NVCR looked very clear and all. Sometimes like, and it is, I can show you another example, Costco. And this is the beauty of these kind of trades, right? And basically that this trade which I did on this particular day was in, when you look at it at this stage, it looks like this was a failed trade or like, and it didn't even make money kind of a thing. But this is what I saw, right? This was the reversal bullish on that particular day, because this is what I scanned for. So I entered just before close 358. Now my stop was very close, right? And I was just like going with like, this is 1,000, this is 860 kind of a stop. And then what happened is next day, it started going up right from the word go, and it went up $11 or $12 before fading. I had already moved my stop because it went, it's like you take that kind of a trade last night and you get that first thing in the morning, and then it faded. Didn't work out like if you look at it in retrospect, but still made money. So means it's all really pattern based. There's no real this thing, but there is a background to this. I don't do this on a random stock. Okay, this is done only on an institutional quality stock. This is not on a random stock. It is only on an institutional quality stock. And you see here, there's a reversal bullish. This is the scan signal. If it is, so here you see, and this one just like an event and exploded. But it only works on a institutional quality stock because institutional quality stocks have buyers at support levels or at like these kind of things, right? And so I'd only trade it on select stocks which have a certain characteristic in terms of institutional quality, or I scan for stocks reversal bullish only on stocks which have 1,000 plus mutual fund owning them. Okay, so not on any random stock. If you try it on random stock, you're going to get killed. It only works on this and if you study that on an institutional quality stock, it happens all the time, right? And it's just that's the way the market operates. If something on an institutional quality pulls back, there are buyers. So that's reversal bullish as far as I'm concerned. So this is the totality of the trade factory. Out of this is the focus in the morning, because the breakout kind of trades show up in the morning. Anticipation, I do this work at 3 o'clock, 3:30, and then buy them just before the close. I don't buy them next day. Okay, because again, this is based on what I told you. I'm always asking who is going to be buying, right? Whom am I going to sell to? So I studied these newsletter writers, and most of the newsletter writers, what are they doing? They're looking at stocks with momentum, and they are looking for these tight areas, and then they're telling people buy when it goes up. This is the buy point. They draw a line or something like that, or they will. So I track some. I have studied some 1,000 newsletters right up there like this. Out of them, 300 to 400 are ex-Stockbee members running them. So I know what they are going to do next day morning, right? They are going to buy that when it breaks out. I just want to be buying before they buy. Same thing on reversal bullish. they do this work in the night and they identify this and they say, oh, this is like an doji or some thing like that and reversal, and they buy it next day. So all that you're doing is buying before they buying. It's always buy before people can find out, right? Now that's what is an age? Age is just like three ways to make money in the market. Either be first or be smart or cheat. When you buy at 358, you are first. You are also smart and you are also cheating compared to people who do it in the nights. So that's like this totality of this trade factory in one slide, which explains what is the daily process or where the trades come from, right? Some trades come in the morning, some trade come in the afternoon, and this anticipation reversal bullish comes in near the close. So there is a time processing in terms of I don't work after 4 o'clock. I have stopped working after 4 o'clock. I just work from morning till 4 o'clock. After 4 o'clock, I do my personal things. So this process, which is called NTRT, MTRT, which is night time is right time to find EP, which is to go through stocks which are gapped up, which are catalyst and all. I don't do it in the night. I do all of this in the morning, combination of this. So in the morning, I'll start with what is gapping up, pre-market scan, look at, this is where you find EP, like in the morning, right? And in the morning, I also do other things, which is to create a situational awareness, to create a watch list of DEP stocks, which is delayed reaction EP watch list I create in the morning, review 20%, 50% study, and identify an EP. So that what happens in the morning, if there is something which is showing up, then I will do a OPG entry, or I will just do a stop adjustment on the things which I bought last night, anticipation, reversal bullish, and things like that. Now, 9:30 to 10:30 is where most of my trades are found. And most of them are in fact found by 10 o'clock because I'm a breakout trader. So I run EP 9 million momentum burst scan. And EP 9 million will start showing you 20, 30 candidates in the morning. The one which show up are the one which most of the time go on to make a bigger moves also. So immediately as I show, I will research, I will see, find out, and then keep on entry. Enter trades as they show up, adjust stop, and exit trades which you are carrying from yesterday or 3 days ago or 4 days. So it's a loop, it's a cycle, right? And basically, so then 10:30, I stopped, I run, I just move away physically from my trading this thing, because I've seen that when I sit there, when you sit at the computer and when you're running scan, even if there are no opportunities, if you make a monkey sit in front of a keyboard, he's going to press buttons, right? So I end up taking unnecessary trades, or the momentum or the bulk of buying comes in the first 1 hour. After that, buying slows. So you buy a breakout, it doesn't work the same way as what happens in the first hour or first 20 minutes. So I just decided that the best way is to physically intervene in this thing. I just go to the gym at 11 o'clock. Okay, so 11 o'clock is my gym session. So I go to the gym, 11 to 12, I work out, I come, eat lunch. 1:30, I run again the same trade, same setup, same scan. If I find some other EP 9 million momentum burst continuation setup, I buy them, enter trades, adjust stop, exit trades. Then at 3:45, 4 o'clock, I again come back and just run the ants and reversal scan, because that has to be done at that stage if you want to get a very good entry, right? So I do my anticipation reversal scan at this stage, 3:30, around after 3:30, and then I wait till the last 2 minutes. 3:58 is when I'm going to enter the trade if there is an anticipation or a reversal. I don't do this process. This is just what I used to do, but I do this all in pre-market. Whatever I used to do in the night, I do it. And after 4 o'clock, I do my other things. Okay. So this is a loop. The process repeats continuously through each trading day. All the scans are set up. Whatever I'm going to use for making analysis is set up. Everything is exactly the same every day. There is no change. This is like running a McDonald's franchise. Right. Then position sizing is a dynamic position sizing. It's not always fixed based on how close the stop I'm going to be getting. then I'm going to determine if I can, I always come with the intention if there is a catalyst based, and if I can answer the question, if it has a clear catalyst, how much it is going to run, if I can increase the size, right? Because if you can increase the size on a trade, which was like in a year, you could have taken 20% and it would run 40%, you would make 8%. And if you can bump up the size, same trade will make you 15, 16%. So I'm looking for this. So then for stop loss, there is a universal stop loss kind of a thinking which I use, and which is if I'm buying a breakout very early in the morning, then I put a stop at low of the day. Okay. If I'm buying it later, then half of the day. And especially, I don't like buying breakouts in the later half of the day at all. But sometimes you end up buying because you're coming in fully invested, or you had like in a positions, and then during the day you sold or you got stopped out, and then there is capital, and then you see something. So in that case, I'm going to look at half of the low of the day, half of the day. Like, and I have that made like in this thing itself, right? And so if you see here, in TC2000, and let's see, like say something like I'm just taking an example from yesterday. I don't know what to stock. So let's take Okta, let's say, which is a bad example because it has a long tail. But so here I have these things put in. What is the stop? This is a low of the bar. So if I was putting a stop, 107 is the low of that day, right? And stop half is finding out how much is the half of this thing. So stop half in this case will be 115.20. Correct. So this is all put into the system, so that when I take a trade, I don't have to go and calculate. I can just quickly say, okay, this is 115.20. I'm going to put stop. Not exactly at 115, but near about that 115 or something I can put in. So I can find my ideas or trades very easily like that. So that's as far as stops is concerned. And I never move my stops down. I always move my stops up. Never, ever move the stops down. Always move them up, right? And there is just no, the moment you make one exception and move your stops down, game is over. I don't use this previous support resistance. This is like nowadays this AI fancy thing. I put in all these ideas and it just generated this for me. Okay, so it puts in support resistance. I don't really care about support resistance. I just put it at half of the day or low of the day. Okay. Same formula every trade. Never eyeball it. It's the same thing for any trade. Either it is going to be low of the day or half of the day, kind of a thing. For order execution, I'm looking for a limit order. If it is a must buy kind of a thing, I need to get in, then I'll use a market order. And if it is something which is like pre-identified in the morning, I did my research and I want to get in, I will do an OPG. Sometimes when I do an OPG, I get stopped out. But if I am convinced about the setup, then I go back into that particular thing later during the day after like it got me stopped out or shaken out. If a stock triggers and it meets my condition, I'm going to take it. There is no debate, and it doesn't take much of a time. This is all procedural memory. You see it, you buy kind of a thing. If I miss a trade, okay, if I didn't get in early, I'm not going to chase it. There is no way I'm going to chase it. It is gone, it is gone. I want my stops to be for between 5% to 6% or less than 2.5% if I'm just going to be doing the just momentum burst kind of trade. I'm not going to chase it. No matter how good the idea, I'm not going to chase, right? And I'm James Bond. Have you seen in a Bond movie, Bond chasing girls or girl chase Bond, right? So I don't chase. I'm going to wait. If I get lose, fine. There is always next trade, right? Stop loss, set immediately on fill. So as soon as there is nothing which is mental stop, there is everything goes into the immediately. And if a trade moves in my direction, after I enter within like half an hour, it goes like say 4 or 5%. I'm going to always look to increase my stop. My first objective is to get my stop to break even or break even plus, because then the trade is free, right? And sometimes I move my stop because you enter and some of these breakouts are very explosive. They immediately go up 8-10% after entry. I just move my stop because many times they just then end up giving up the gains also, right? Anyways, so stop loss immediately on fill. Then profit taking, again, I have like any EP or EP 9 million, if I'm going to be entering, I still have this framework, which is these trades are going to be either in duration term between 3 days to at best 20 days. Because I studied 100%, 200%, 300% moves. And if they are going to be magnitude moves, they can make that 200, 300% move in just 3 days, 5 days, or 8 days, or 10 days, or 15 days. So my thing is, I always look at like doing. Now, if I'm going to doing an EP 9 million or a DP, I always have a target in mind, saying based on this, like say when I got into love, which was like one of the turnaround kind of a play, the Southwest airline, and I looked at it, and it is a turnaround. So I thought like the guaranteed move on this is 20%, and because turnaround tend to last for a longer period of time, it can keep on going. This can end up into a multi-week runner kind of a thing. But I moved my stop on 20%. When it reached 20%, I really moved my stop to protect 20%. And it so happened this whole Iran thing and all started, and the thing collapsed, right? So even though I had a profit which would have been higher, I just ended up making 10%, 20% on that. So I always scale out, right? And I scale out trades. So if I buy a pure momentum burst, like say something like this, HAE, if I buy, I'm going to be definitely selling it by third day or fourth day, right? By third day, I would sell 60, like in a 40% or 20%. I'll move my stop like just not even half of this day, because this is already a 5% kind of a move. I'm not going to do. I will move my stop just like in a 1/3 of this move kind of a thing. Next day, start going. Then I start moving my stop aggressively. If I'm there in the office, if I'm going to be walking out of the office, I just trail. And the trailing rule which I use is once it has gone this much, right? And this trade, if let's assume that I didn't enter at the end of the, I entered earlier. But like once I have like what I expect 10, 12% kind of a stop, I'm going to like start trailing very aggressively, or just sell 80% and keep a 20% in case it runs. The trades all exited on third, fourth, or fifth day, depending on how they run. Basically, there is nothing which I'm going to hold beyond that. If there is something which runs and once I exited, it runs, it's okay. I am not worried about that. 3 to 5 days, right? That's the unit of moves. All these stocks move 3 to 5 days. So that's as far as this is concerned. So profit taking, sell into, so everything is sell into strength. I don't sell everything together at one time. I'll sell 20% of my position, sell another 20%, sell another, and sell another. So this is why what I do is I have bought one of those cheap pillar which you get on Amazon, and I keep it on my trading desk to remind that to pill your position, because I've seen many positions which are 20% profit. If I didn't sell them, they just end up giving up that gain. So I sell 80%, keep 20%. Within that 20%, I'll sell another 40, 50%, keep small. Sometimes I have a very small runner which goes for 5, 6, 7 days, but nothing like that kind of a thing. If I'm taking EP 9 million or something, I always have a target in mind, 30, 40%. If it makes, I'm going to be more aggressive. The rule of my stops is that if something runs faster, I should move my stop more aggressively. If something runs slower, I should move my stop slower. So if something starts running faster, I will go. And if I was trailing with 3%, I drop my trailing to 2%. If it starts even running much faster, I drop my trailing to 0.5%. Sometimes I drop my trailing to 0.5%. You get stopped out, but in the meanwhile, it can go. So the higher the speed of the move, the lesser the trailing you use. That is the general principle which I use. Most of the time I get stopped out on trail. So basically, hard stops only, no mental stops. Then I have also a rule which is like if there is some certain percentage loss for a day, or 3 trades in a row which I bought breakout and they hit my stop loss, I just stop trading, because I know something is wrong. And this is what happened a couple of days ago. I had like an NVIDIA, I had I think what else I had, like CL or something. 2 or 3 trade I had, B, I think, and 3 trades I had, and all of them got hit first thing in the morning. By 10 o'clock, I said, like, there is something wrong in the market. I don't know. My best option is to just like walk away and protect my capital. And good that I did that, because next day the whole market collapsed and everything, all the open profit would have been wiped out. I just have that rule. I know, because I keep track of situational awareness. So I was not expecting something like this. 3 trades in a row doesn't work for me, means I have a problem. So that's, and I don't mind closing. I can reopen position. I don't have this whole thing, oh, you keep on holding and all. No, just like protect capital at any time. You can always find opportunity. So everything is like same routine. So this is a muscle memory. I can do this in my sleep. I don't need to worry about like Magna 53 cap 10 by 10. If I explain, I'm saying this. But when I look at, like, I can do this in seconds, right? And if I had to calculate stop, I know where to do, if I had to move. So all this is this. The broker platform which I use is, I have multiple brokers nowadays, because there are some different kinds of accounts I have personally. So I have Fidelity and Interactive Broker as the main brokers, but I also have Schwab and some other brokers for some other accounts. Charting, I exclusively use TC2000 and Market Search for like the financial data. News sites, I use briefing.com, Finviz. And nowadays I found that the best way to find news is to just like go into some AI platform and just put in the ticker, and I have some scripts written. So they just like go and find out from some sources, which I said, like find out on Twitter, Reddit, and this reliable news site, WSJ, this Bloomberg, this, and then they give me what is the news on this particular thing, kind of a thing. So that's the goal is make execution mechanical, every action redefined and repeated until it's a muscle. That's the idea, basically.
A quick question before you move on, Pradeep. Sorry. Going back to position sizing, how much of your account are you willing to commit to the home run type trades versus the single type trades, or is there a difference? Basically, what are you
for a single
targeting?
kind of a thing, I'll do 20 to 25% of my account, right?
Mm-hmm.
But if I'm doing an anticipation where I'm taking an overnight risk, then I'll reduce it to around 10% to account for some time, like, and it can go against you. So I cannot go like in a crazy kind of a thing. And it's my situational awareness is like, say, look, and it's like really the market is likely to run like a couple of weeks ago or a couple of months ago, when the T210, which is one of the things which I'm going to discuss later, which I use, which is what an indicator was below 20, I was expecting the market to explode. So that time I just went crazy, because I knew even on a normal trade, if I found, I was just trying to get in, because the idea is when the sun is shining, capture as much as possible. Now, currently, when we are doing this particular thing, my situational awareness is this is choppy market, range bound, very, very difficult market for breakout. I'm not even 5-10% invested in this market. But even if I find a breakout, I buy it just for like testing out an idea. But if the market is, at times, if the market is good, I will, even on a normal just single hit, I will go 60-70% also, because it's just quality of setup and your confidence in the market at that stage. But for something like EP 9 million and EP, I'm trying to get, means like for GLW, I had like a really big position. Even for CRCL, which I bought through CRCA, I had a big position. Even for some of the other institutional quality thing, which like for NVIDIA, the day I got stopped out, I had a position which was like a huge position. Basically, in terms of on margin on that day between the 3 positions which I had opened. So I want to put as much as possible on the institutional quality stock. I will not do a large position on non-institutional quality stocks, especially stocks like Google or like an NVIDIA or Oracle, which I traded multiple times in the last quarter. Means I don't want to even say, because people start getting scared, right? And basically, but that's the game, right? So if you can't do size, I made a video also, right? And you must have seen where I said size matters, right? And that's really what this game is once you're on edge, right? And obviously, if you don't have edge, then it doesn't matter. And plus situational awareness.
Right.
Obviously, everything is situational awareness specific.
Yep.
So this I
Perfect.
can
Thank you.
skip because I explained this already. Okay, go ahead.
Mhm.
Whatever.
No, that's all good. I think it was a great summary.
This is just what I explained to you, okay, like EP classic, neglected names, game changing, but doesn't happen. This is what I really like, and looking at the volume is the footprints of institution. That's the hypothesis. Then you go and find why this stock is trading this kind of a volume. It's like trading in the top 2% volume. Most of the days it is not even 1.5% of the, and sometimes you get like, and they are trading in the top. Why are they trading that kind of volume? Then just to find, is the catalyst worth finding? Filter for noise. I don't go into this low price, like there are a lot of these low price stocks which will do that kind of a volume, like if you see CRC or Corsair or something which did like a huge volume, or I research them always because if I can research a catalyst and I know the catalyst, later when they become higher priced and when they offer opportunities, I can get into them. But I'm not going to trade things which are $3, $5. Sometimes I do, just, but the size doesn't really is big. Like I'm not going to buy 100,000 shares of a $5 stock. No, never. Okay. And then DEP is something which is like, and let me get into a little bit into this DEP because this is another one of these things which I use a lot nowadays. So DEP is, again, I'm only focused on DEP on a certain kind of stocks, not on everything in general. So what I do is I just focus on two types of stock. One which is owned by 1,000+ funds. This list I pulled from market search. So these are stocks which are owned by, and on them I'm looking for EP 9 million, which has happened in the last 1 month. So DEP is essentially a setup on an institutional quality stock or a stock which has a genuine catalyst and which had, after the earnings or say whatever the catalyst which happened or EP 9 million happened, I'm looking for a lowest risk entry point after a shakeout or a small pullback, which happens within the 25 days of the catalyst. Okta is a classic example. It has a catalyst. It made a EP 9 million and then it still has a valid catalyst, and now this is what is a DEP. It was on my watch list like yesterday, coming into yesterday. I had this is how it looked yesterday before this, right? And so it was setting up probably for potential. I had Snow. Those are the two stocks which I had on a DEP because again there is a catalyst and orderly pullback after that. And this particular stock, while we are on it, 3 times I entered this stock. I have a rule on DEP that because if I'm convinced that there is a genuine catalyst, I give it 3 tries. But my stops are so close, my entries are so good. 3 times on this day, it looked like it is breaking out. I entered, I got stopped out. This day I entered, I got stopped out. And third time I tried, I think on this day, and then it's just, there are some stocks which are just like that. So if 3 times I try and it doesn't work, then I just wait for a confirmed breakout to buy, and I just don't do any more harm to myself, right? And I feel it.
Yeah. Question on Snow actually here. Yeah. Question on this. Can a chart get too tight because it was just tight for so long here? Is it more prone to a shakeout in your experience? You kind of, like you said, you kind of wait for the actual confirmation of the breakout in that situation.
When I see chart going sideways for too long, especially beyond, like the one which really have going to work, they break out in 3 to 5 days. I will show you example like TXN broke out in 3 to 5 days. So GLW 3 days and it broke out. So what this tells me is there is no urgency on part of the institution on this particular stock, or they are not convinced that this catalyst one earnings quarter is sufficient for them to get involved in this particular thing. So there is a clue, and I was very bullish initially. I thought like this is good. I'm less bullish. So sizing in terms of what I expect now, it's so. The one which break out, look at this, right? GLW on earnings, 3 days.
Yep.
Right? TXN, which is like another GEP, like 3 days, 4 days, it just goes, right? And there is urgency. So these Okta, There is I think DOCN or something, Digital Ocean or something also. There is nobody is really believes in this catalyst according to me, right? Or they're waiting for the next quarter or something like
Right. Makes sense.
that. Yeah, this is another stock which I tracked, entered, nothing happens, entered again. So I have these three
Yep.
rules. Okay, look, and if you go on a date 3 times and nothing happens, you just like and move on, right?
Yep.
You're married, so it doesn't matter to you.
Fiance,
Yeah.
but not yet. But yeah, same
Okay,
idea.
okay. I thought you're married. Okay. So let's go back and look at this. So this is just a summary of what I discussed. DEP, I'm looking, and the difference between EP 9 million and DEP is DEP trade is always from watch list, and it is like I only have 3 or 4 stocks which will meet my DEP criteria, which I'm watching like a hawk. I will put everything into my interactive broker. I'll even create a market order or a limit order ready, and I'm just watching. If I see a sign of life, I press it button. So sometimes I enter but then this is where you can do size because you are like watching like on that GLW. I could do the size which was like a crazy size because I was just like watching as soon as entered, stop was less than 1%, right? And it just went after that, free money. So this is watch list based. All the work which I do, and now this also in terms of working on this, I don't do any more this DEP work in the night, which I used to do or in the morning. I moved this process to 3 o'clock because then it also allows me sometimes if everything is setting up. So I just like enter in anticipation, gives you a better entry, and then you can add more next day if it really breaks out. If it doesn't, you take a small cut and blame somebody. And it's always better to blame Trump, right? So we went through this momentum burst in just 3 to 5 days. Within momentum burst, I'm more focused on the higher price stocks. So I'm not really looking at these lower price stocks, 8 to 40% kind of thing. I focus more on 50 to 300. Plus one of the rules which I've done, especially since this year, is I really don't even trade momentum burst, which don't trade a million shares on an average, right? Because liquidity is becoming so important. I need liquidity. So I don't even trade a higher price stock. And if you look at the mathematics of higher price stocks, returns are higher in terms of R's on higher price stock than on because you can get stops which are very close. I can get into a high price stocks with just like 2% stop. So small moves can also pay off. So this is all based on structural tendency of market, where the market moves in 3 to 5 days. I'm just looking at start of a swing. The signal is large expansion bar. That's all there is to it. So this is all hitting singles. One trade is not going to make your year, but hundreds of trade make your year. And in case something doesn't work out on the other side, you still have continuous set of money coming in. Then for everything there is a criteria if I'm going to do or there is a classification of breakout, because not all breakouts should be traded same way. After a lot of years of experience, I know a breakout which is a continuation, which is like where it had only less than 10 days or 3 to 7 days, is a different quality from something which is a consolidation. Like we saw Digital Ocean. On a Digital Ocean kind of a thing, if you just get a breakout and you get in very excited saying, oh, this is a long base, and then it's going to, most of the time when you buy a breakout on something which is having more than 3 to 4 weeks of consolidation, more longer consolidation of months and all, unless there is a clear catalyst for the next leg, you buy a breakout which looks perfect. It will have a cup with handle, VCP pattern, whatever pattern you draw on it, and you buy it, and invariably that thing is going to go squat and go back into the range. So I have a qualifier for buying a consolidation record. I only buy a consolidation record if there is a catalyst and a volume surge. But while for a continuation setup, I don't need volume because the volume has come in the first leg. There is already aggressive buy. So here the criteria are 2 lanes, which is like the stock should not be up 2 days in a row, linearity, young, narrow negative day, consolidation quality high. Here I say like, and I always tell people like, if there is a consolidation breakout, and if you just buy it because it is a consolidation breakout, you're going to spend a lot of time in heartbreak hotel, because most consolidation breakout don't follow through unless there is a catalyst or a volume. So then the qualifiers, what I call qualifier for a consolidation setup, I'm going to qualify using catalyst and volume. And then bottom bounce, I showed you like NV core and all. I'm just looking for some sort of an exhaustion. I'm looking for whether the market itself is going down and there is a turn in market. So because when the market turns, you're not going to get continuation and consolidation setup. You get these bottom bounce kind of a thing. Let me show you an example of this. When the market turned after the Google, this was a bottom bounce, right? It was like a stock was going down, everything was going down. On this day, the SPY also turned, a Google turned, and every single stock, means you could have just like that day, if you ran a scan, you were feeling like you were Saudi Sheikh in a harem kind of a thing, right? And every stock was looking like this. But this was a bottom bounce. So this particular day, this was the start of a swing, EP 9 million, but it was coming in from bottom. But I was perfectly okay buying it, because the context was T2108 was below 20 and the overall market itself was also going to be turning around. So this setup I only trade when the context is right for this particular. And that day, every single stock, large stock looked like that. You could have bought any one of these stocks, NVIDIA, I think Amazon, AMD, bunch of them, like all, even the thing. So that is the context. Always like always look for a context and a criteria. What is the context for this particular stock? So then weak structure short, which is a short setup which I trade, not such an important setup because you get enough in nowadays. I get so much opportunities in EP 9 million that I don't even have money to do most of the time some of the other things. But this is a short, weak structure short kind of a setup where I look for a stock which is very weak, which sells off 3 days in a row and just has 2 or 3 days of pause and then it starts selling off. So I have criteria for that also. This is all singles, all like just pays the bill, keeps the cash flow going, creates cash flow for putting in larger size. If you find some idea like GLW or CRCL or something and you need to take a larger risk. So this is, but I'm not going to stop doing this because this is very good. It gives you practice. It keeps the register ringing, right? I like my register to keep ringing. What else is there after this? Yeah, reversal bullish. I talked about reversal bullish, anticipation setups where I look for 2 tight bars or 3 tight bars, decreasing volume, net change less than 1% or something like that. And this is a situational awareness. So every day morning, first thing when I get up, I'm asking, and this is why I got these things done. This kind of like things, are breakouts likely to work? So if the breakouts are likely to work, I keep this wooden thing on the right hand side. So if I put it on the right hand side, I know to buy breakouts. If I put it on the left hand side, that means just tie your hand and sit on your hand. Okay, so are breakouts likely to work? Yeah, okay. So then you go early, you try and find breakout as early, you do large door sizing. Then there is market environment where like some breakouts are working. So you have to be very selective, trim size, do lower size, have a lower profit expectation. So I go in with a very low profit expectation. I drop size. I like very, very careful in terms of taking a breakout. And when breakouts are failing, I don't even trade, right? And basically, so this is a framework for situational awareness. And the input for this comes in from 20% study, which I do daily, market monitor, my own trading, how have the last 2 or 3 breakouts worked, what am I seeing in other breakouts. So this is just a framework, but this is very important. This is the key to success in breakout. Breakouts have a inherently very small edge, right? Most of the time buying breakouts is a terrible business. You're not going to make money just blindly buying breakouts every day, right? But there are times when it is a very good business. where like every single breakout you buy, like on that day when the T210 it was very low and the market itself turned and all, everything you buy worked, right? And it's like literally everything you could randomly throw a stone and buy any breakout and it worked. And then there are times like now, people are getting frustrated. And I told them, I did a video on my site uh, last week, warning them that saying, look, this is going to be a London weather. You're going to get fog, dark, dingy clouds. Don't go and wait. But people don't have patience, right? They want to trade because they see setup. And the other thing is that when the market is, when breakouts are failing and when things are not working, a good breakout is still going to look exactly same like a good breakout looks in this market condition. If the market is selective currently and everything is not working, terrible things are happening, right? And you run a scan and you see a breakout like HAE, it is still going to look exactly like HAV. It is going to look perfectly fine. But the situation is not going to allow that particular thing to work. There are a lot of people are so frustrated. Some of the people bought like yesterday Marvel and then it sold off, and some days ago they bought like and they're just complaining. I keep telling them, hey, I like operate with situational awareness. That's your best strategy in life. So this is as far as this is. So let's go and look at some examples before I take some questions from you, and then we'll look at some examples. What are your questions here? Like you can ask. These are just random examples of some of the trades which I did.
Yeah, could you actually show your market monitor and kind of walk through how you look at it day to day and what things you're considering?
So here, this is just, means lot of these columns is bloatware, right? And initially I had only these 2 or 3 columns. So now people say, why don't you track this? Why don't you track this? Why don't you track? So it's literally only thing which I look at is how many, is buying coming or selling coming into the market, right? And basically here, there's a bunch of buying, or like, let's look at when the turn happened on that particular day, when there was a big buying came in, right? And buying came in, and buying came in, and buying came in. So breakouts worked. Buying came in, everything was working at this time, everything was melting up. Selling came in, big selling came in 972, and then selling. And now in the last couple of days, again, little bit of a buying came in, which is typical of a range bound kind of a action, right? And basically, so that's how this is like, and basically. Now, these ratios and all, Stockbee members are added. I don't even pay attention to those ratios. There is no value in those ratios according to me. They're just a ratio of 5 days of this buying to selling kind of and 10 days. So I don't even. But this is important. In general, as a thumb rule, when the primary indicator or the percentage of stock, number of stocks of 25% in a quarter is green, that means like more stocks are going up than going down. It's a good environment for breakout trading. Right? But this particular thing is not the only thing which I am going to use. In fact, I rely less and less on market monitor than another indicator which I have created, which is again market breadth only. But while we are at it, look at it like this. The T2108 is a very good indicator. It's an extremely good indicator. It is the percentage of stocks which are trading over their 40-day moving average. And it only looks at NYSE stock. It doesn't look at the other stocks. So it's like looks at. So here you see this. This is why I was like screaming, saying, look, the market is going to turn, market is going to turn. When it goes below 20, it stays below 20 for a very short period of time. Every time it goes below 20, if you bought Soxal or if you bought TQQ, you are going to make money. Because when the market gets so oversold, buying just comes in. And this is exactly what happened. So this T2108 I have to pay attention to. There is another indicator which I pay attention to, because everywhere, if you go on Twitter, everywhere, everybody is saying, oh, there is a bubble, there is a bubble, there is a bubble, right? I know what a bubble is, or what is the indicator which will tell you there is a bubble. The one indicator which tells you there is a bubble is the absolute number of stocks trading in the market. If it increases by 800 to 1,000 in a year, there is a bubble. And you can go back and check this indicator. When number of IPOs increase by 800 to 1,000 in a year, then typically that is a bubble. So I watch this. It doesn't move on a day-to-day basis. But if you go back and look at this, during the COVID-19 time, if you see 2023 or somewhere around that time, it jumped by around 1200 because those 1200 SPACs came into the market. Before that, there were only 4,000 stocks trading in the market. And then that's when the market corrected, right? And that's when everybody got into trading because they come in only at the bubble. So these are some of the things, small nuances. Now, this is converted into some sort of a green light, red light kind of a thing. If the green light is a buy back out, but it's not as simple as that. Because I also look at the context of the market, and the context of the market which I look at is driven by this particular thing, 20% study. This is SPY versus the number of stocks, even common stocks, which are up 5 days, 20% plus. So this is like looking at stocks. If you go to the scan, you'll see that it's looking at a stock which is priced above $5. About $3, and which are up 20% in last 5 days. So this is like an oscillator, right? What I have seen is that when it goes to this extreme 200 and all, not immediately, next day selling comes in, but invariably when it goes like this, you get some pullback in next 5 to 10 days. So it's like a warning signal telling you, like this is why on the Stockbee side, we were like in a very cautious. I said like no matter what people say, this time is different. It is never different. The time is different because market has already made like some 20-30% move, which is historical. And this indicator is screaming, it's 200, right? And we are ready. Okay, look, in case like there is selling, and I had like almost like put stops very aggressively and all. And this is what happened. Now this indicator also needs to be interpreted in context. When T2108 is low and when it goes above, I don't really pay attention because I expect that to happen because market was oversold, so it's going to come in. So I'm not going to sell at this first sign. But third time, when it reaches this, and especially about 100, and the good thing about this is like you can see it. It's here. This means like you'll see this on the thing. Like every time it goes in a small period of time, at 3 to 5 days after that, there is either a minor dip or a major dip after that, right? It works the same way, reverse way. If it goes below 20, like on this particular day, I was like in a bullish. And I said, I'm bullish. And I even posted on the timeline on my site saying, because this is below 20. The number of stocks which are up or down was 17. So when it like reaches extreme low level, they'll buy. So this is like a mean reversion kind of a thing. So this is one thing. So this is another situational awareness. And this is the main tool which I use nowadays, like a market monitor again, yes, but this is the main 20% plus study. This is something which you can only do this in the highest package of TC2000. You can't do it in a regular package. So you need the whatever, earlier it was called platinum. Now it is called some premium plus or whatever, right? And so it's done. It charts the number of stocks which are up or down, and this is just a combination of them. This is one thing. In addition to this, I have this framework in terms of thinking, which I call at like T3A and T30A, which is think 3 days ahead and think 30 days ahead. So when the market is coming out of something like T2108 is extreme and all, I am not even worried about a market correction because I know for at least 30 days it is going to go up, right? That's not when you need to get worried. That's even minor pullback is going to get. So if this reading get higher, I'm not really worried and all. But once it crossed that 30 level kind of 30 days kind of a thing and all, then I said like, okay, just never say never. Anything crazy can happen. The market can go and make another move like this. As somebody keeps saying, can a marathoner run another marathon back to back? In theory, yes, but in reality, unlikely. So it will transition into a chop. So I have been saying this for some time, saying this market has transitioned into a chop. So that's my T30A now, thinking 30 days ahead. This is going to be a period which is likely going to be like this, or going to be a period likely, because that's what happens after a big move, going back historically, or this will be a period like this. So now, if this is my thinking, it is reflected in my trading. I was very aggressive buying things here. I bought bunch of stocks, 150% invested on this day when the breakouts, and they all like work for 3 to 5 days, and then I am out of most of them. So it's just a framework for thinking, and decision making for situational awareness.
What goes into the T3 ahead, the 3 days ahead?
It's always determined by where we are in the phase of the market, right? And where you're like, and I say this, there are a lot of these small things like market is down 3-4 days in a row, right? And you know that it's going to bounce back, right? And so you don't get, people got very aggressive shorting on this day. It's like, no, you don't get aggressive. You want to get aggressive, go on the first day or like something like that, right? So now after it went up 3 days, I was, and in fact, I can show you on my site, I said like on this day, in the morning, when I do the morning meetings, I said like, look, this is another day, I will give it. And I'm very cautious. I'm not really bullish here because I think this move has happened 3 days. Most of the stocks have already made 10-20% move in 3 to 5 days. They're not going to keep on going. So I'm very cautious. And everybody is saying that you're a CC, you're a pussy, you don't like, no, stocks keep going forever. I said like, I'll rather be a pussy than risk my money. So I reduced my exposure. I had a very little exposure. And then yeah, if you start this at first, I didn't have all this knowledge or understanding of market when I started. I wish I had, right? But more you do it, you can see this is over. This game is over. This party is over, right? This is going to transition into, means I've seen this for 26 years. This is not my first rodeo. I know that this is likely to go into this kind of a thing. Yeah, I'm ready in case it goes. And I will put in money because I have set up a trade factory. But I think this will transition into some job and death by 1,000 cut. And invariably, new traders enter the market because everything has been working. And then everybody tells them, you just put a stop at 10-day moving average, 20-day. You should not trade for magnitude. You should trade for duration. Everybody gets sold on duration. At this stage, everybody was telling everybody and their cousin that you should be a duration trader, right? Seen this for 26 years, man. Seen this for 26 years. So this is going to be job, according to me. Obviously, I'm willing to change my mind. I can change my mind on a dime. I just don't see how it will like transition into some, unless there is a time which goes sideways. So I'm trading accordingly, right? I buy inventory, big inventory I bought, sold 3rd day, 4th day. Sitting in cash, bulk of the cash, waiting for another opportunity, right?
Could we go, did you have something else to show or?
Yeah, you can ask anything. I just wanted to show T2108. Yeah. Like, and I say this goes below 20. I'm telling you, every time it goes below 20, if you just like start getting bullish and not getting bearish and not believe all the end of the world scenarios, you'll make so much money. When this was coming out, I bought Soxal, right? And because I was like just waiting on Soxal, and then that Soxal made this crazy move, right? I bought TKQ. When it started turning that day, when the breadth the thing happened, this thing made a crazy move, right? I was watching Koru, and I like, because the Koru was going crazy, right? And so like Koru, and that the thing made. So if anybody like T2108, I always tell people, right? And if T2108 goes below 20, start getting bullish. If it goes below 10, you should be extremely bullish. And if at all it goes into single digit, sell your wife, kids, donkey, horses, whatever it is, and buy the market. You are likely to make money, guaranteed.
Great. Could we dive deeper into the GLW trade because it seems like a little bit of a standout trade for you?
GLW,
and I'd love to also
right?
talk about the GLW. And I'd love to yep. Okay. And if you could talk about like putting out your exits too, that'd be great.
Okay, so what happened in this particular case is like, this stock was going sideways, right? And this is I had looked at this stock every time. If 9 million happens, I always look at it. So I had like looked at it, but it is not a very fast moving stock, or it is not something which is like got me excited and all. But on this day when the earnings came in, right, and there was also news that they have a Meta or somebody has signed up with them. So I researched it on that day. I looked at it. And then I realized, look, this is no more that Corning company which I had seen sometime. I had gone to upstate New York and I have seen this factory and all. This is not that same old glass company. It is actually getting a lot of business from this AI kind of a thing. So I looked at the earnings, sales. I looked at all the things which were showing up there. And I said like in this particular thing, and if you see the earnings, somewhere I should be having market search. Where are my things, right? And I looked at all the things and I said, okay, this is something which is likely to make a uh, around 40% kind of a move, because it was like it had a earnings acceleration, sales act. And I am a sucker for sales acceleration, but like it's not a kind of a company, it's too large, right? And so, but for the kind of business it is 17, 14, 15%, it was projecting, it had like this, it was growing, hardly growing 14, 15, and it had started acceleration. And not only the acceleration in earnings, but also they were getting these orders. And also I said, okay, uh, based on this, based on all the information which is in front of me, this is likely to make around 40% move, kind of a educated guess kind of thing. And then and I bought it, and I when it started going around 40% and all, I started tightening my stop. And then on this day, I had sold like 80%. I was holding a runner, and then this happened, and I got stopped out. So one of the things which I look for is typically on this kind of plays is the first range expansion to the downside after my entry. So this is the first range expansion that you told me that there is no point in just sitting in this. Probably this is over. And then I tried again. But here is the other thing also. The catalyst have lifespan. This catalyst again didn't work. So that's another thing.
Did you take a partial the first few days of this as well, or for?
No, I didn't take a partial. I was very bullish because I was, and that's why I put in a larger position. Even in the case of the CRCL, which I expected a 50% move. When I looked at it, I said at least 50% move is going to happen on this particular stock. Right? So when it started approaching that kind of, and I was not playing with means after the first day's move, I was expecting another 50%. So now I was playing with the CRCA, not this one, but I was tracking this for my targeting. And I said look, man, this is good, right? And this has reached my target. So I sold 80% and I said 20%, if it keeps going, I'll keep it. And I had to stop at here half of the day. And then I got stopped out on remaining. And just lucky also after. Means there is no point in holding. These moves are not, all my trading is designed for these kind of moves. If I had to do something and hold it for 3 years, 6 years, or 3 months or 6 months, I will completely redesign my trade factory and do a different way of doing this, right?
Excellent. I'm sure you get this question all the time, and people are probably asking it right now. What really separates just a normal gap from something that can be an EP? Again, I'm sure you get asked this all the time, but it'd be just good to clear that up.
You need to see something which is stares at you, which tells you that, hey, there is a massive acceleration. This is why the first thing which I look for whenever there is a thing is which is massive. It has to be something massive, right? And like something which is a game changer, something which is out of ordinary, right? And something, either a massive theme or a massive acceleration in sales, earnings, or massive order, or something big, which is like a CFO leaving the company, or something which is big, right? And basically massive. Now here, look at this CRCL, right? There's people had very low and this works only if there is a low expectation, right? And basically, if people have high expectation, then it doesn't really work. Very low expectation people had. This is IPO'd. After that, it is in the dustbin of the market, and then it comes and surprises the market. Then it happens like that. Or there is a government policy change, right? And here, MP, this was a stock which was many years ago, it had made a move. It was in the dumpster of the market, and then there is a catalyst comes in, and suddenly one day you see that government is taking a stake. That was a big shock. That was and also the volume told you that also, right? Even in this particular case, I didn't buy it on the first day. I bought it as a DEP on this particular thing. So it's the massive it's a game-changing catalyst, something which is let's look at recent example, which people called it an EP, and people call everything an EP nowadays. That is because they just now this CBRL, and I saw everybody saying this is an EP, this is an EP, this is an EP. Yeah, means I look at CBRL, which is Grackle thing, right, and which is that thing. I looked at its earnings and sales. Miss, yeah, big deal, man. Like, they had what? Like, this is like -5%, 3%, 5%. It's like, okay, they might be turning around business, but that's not how a turnaround looks. What does a turnaround looks like? I'll show you an example of a turnaround. And everybody is scratching each other's back and kissing their cousin and telling this is a turnaround. This is what a turnaround, real turnaround looks like. Here, there is a real turnaround, right? Company comes out and declares earnings, says we are having 244% profitability, and we are projecting for next few quarters our sales growth is going to be 18, 20, 21 for the kind of size and the Abercrombie & Fitch is a very old company. And before that, it was doing nothing. It was doing -7%, 4%, 1%. So context was that, okay, this is like an acceleration, right? So that was a massive turnaround. And that's why the stock went and kept on going up. And I saw some of the things which Twitter people were asking. You asked them what question to ask them. They said, we want to trade duration moves, right? And if you want to trade a duration moves, you want to find genuine turnaround, because genuine turnarounds, if a company does a genuine turnaround, which is what happened in the case of Abercrombie & Fitch, where like there were a lot of factors, right? CEO had an affair with some guy and wrong products, and that preppy look, Boston looks went out of fashion and things like that. And then they managed to turn around, right? Now, when they do that kind of a turnaround, this is not going to be one quarter, right? It's going to last for, because they fixed something in their business. So it's going to last. Or very recent example, if you want to see here, Love, okay? Which is Southwest Airlines. If you remember the history of Southwest Airlines in last 2 or 3 years had terrible problems. One time their software froze, they couldn't like run flights, everything was a mess, competition from all the other airlines, you name, and they had problems, right? And then they did something, right? And you see now they are projecting sales growth of 18, 19, 440% profitability. So they really turned the corner in terms of getting things right. Obviously, this happened because of the Iran. If the Iran war would not have happened, I am sure this stock has made a real turnaround in business, right? And this is why it is a turnaround. Now, when there is a turnaround, if the company has done a genuine turnaround, that is going to stick, and it's going to last for a long period of time. But you have to understand, and this is why I recommended a book, and unfortunately, I was just like responding to somebody, and the moment I recommended that book, there was a run on that book, and the book is no more available. But there is a book called Stock Market Blueprint, right? And it's a very old book. It's like, I think, a 40, 50-year-old book. But in that person gives you a good framework to think what is likely to make 500% move, and turnaround. Cyclical turnarounds are going to last for 1 or 2. There's a cyclic, like here is an example of a cyclical turnaround. And in cyclical turnaround, there is not going to be necessarily immediate earnings going to reflect that. But here, if you see Dow Chemicals, right, going down, 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 was in the dumpster at the beginning of the year. This was the worst performing stock in S&P 500, right? And then all kinds of problem. Chemical industry has this problem. Chinese are getting their lunch. This is that and all. And then now there is a turnaround in this cyclical turnaround, right? And this is a cyclical turnaround. This is not, it's like the cycle has turned because of all these problems. Chemical industry shrank, they reduced costs, they did all this. And now that turnaround has happened. And this stock has made 91% more. So you need to have a framework for thinking for anything which you do like that. So massive is relative. What is massive for Dow is not massive for S&DK. In a technology kind of a sector, what is massive is going to be what you see in a S&DK earning, which is 4-digit or something like that, right? Or move earnings, which is very different than what you see in a retail. If there is a retail play, you don't expect turnaround is going to be 20% growth rate.
Excellent. Perfect. So I think that was most of the questions I had. Did you have a few other examples that you wanted to run through? We've already covered a lot, but were there any other key ones?
I'm just going to run through some examples that gives you visually a lot of like ideas to people, right? And this is like a momentum, typical momentum burst, right? And this is just a pattern based kind of a thing. And then it makes like this 8-9%. Sometimes like in a Koru, I discussed Koru already. HAE, this is like an example of the kind of trade I always look for. If something like this comes in, I'm just going to buy it. I don't need anybody's permission to buy it, right? This is circa, which I told you for the, whenever there is a triple ETF, I find, and there are like, this is what I look for in a continuation setup, right? Tightness, 3 tight days, and then it coming out. 3 or 4 days tightness, and then sudden range expansion. So tightness is very important. Tight, tight, tight. And that's what my mantra is. Again, like, this is a momentum burst, first leg, and continuation setup kind of a thing. This is like, instead of trading AMD, I trade AMDL. So if you see this hut, now this is an example. On this particular day, there was some catalyst, and I researched it. I said, like, I am not going to chase it because I didn't get, and I didn't know even realize this catalyst is important, right? This is the other advantage of EP9 million. But when I researched it, I knew this catalyst is good. So I was waiting, and this is where I got in, and I got as a delayed reaction. So this is also example of a delayed reaction. EP, this is Fargent Power, which is an IPO. Again, AI theme, earnings. So earnings acceleration. So here, like, it made a move as a EP9 million. So this is like example of another, like, a non-gap kind of a EP9 million kind of a setup, right? Sweet green, which happened recently. Nova Cure, which is just a reversal bullish kind of a setup. This is something which I'm watching as a delayed reaction EP now, because there's this government takes stake, and after that it is setting up. So this can be like example of that. Best Buy, this is an example of a reversal bullish. Again, you see this. It's a institutional fund kind of a thing, prints reversal bullish, next day, you see. So again, this is a pattern based kind of a trade. Lulu, this is an example of a short where there's a clear catalyst, and I waited and like, and then shorted. So Hyliion, this is, even if it is a low price stock, I don't get into, but if it shows up in EP9 million, I do a research. So on that day when it showed up, now when it breaks out, I can get into it as it comes into my price points and things like that. So that's what UL, as I told you, all the airlines were going up. This is Velo. Again, this day in the morning, I didn't really realize the catalyst and all earnings was there, but like, and then here it showed up on reversal bullish also. So reversal bullish 53% in 4 days, right? And again, second, this day, like, and I didn't get in, like, and I had a dental appointment, and I really wish didn't had that dental appointment. I missed 57% move because of that. So Snow, Okta, these are just examples, some of the examples. Like here again, I got into this, got shaken out, right? And I stopped out, enter again, and then the stock made 45% move in a couple of days. So you get, sometimes it just, you get stopped out, and then you find another point. Love, I discussed Love with you. SNDK, this is like one of the best stock, but you're not going to get these kind of stocks every day, right? And so this is like a normal momentum burst, right? There are some stocks which continuously give you 30-40% in each swing. So I just have found a way to find those stocks and trade them continuously. Again, this is an example of EP9 million, where I only bought this because it showed up in EP9 million. I'm at 71%, right? And basically, Dale Lunar. Lunar, again, on the day of Rocket Lab earnings, I said, like, this is this. I first bought Rocket Lab, and then I bought Lunar, which was showing up in the EP9 million scan. Wait, this is again like multiple times traded. So yeah, Astral Lab, we just had a EP9 million, but it has EP9 million multiple times, giving you ability to get in. GLW, I discussed this. On this day, I researched this, okay? So they had missed earnings. They said like their margins are under pressure and all. So I was waiting that, look, and if it gives me an entry, it never gave me a DEP entry, just went straight. So when you look for DEP, sometimes you're going to miss trade because it just doesn't give you an opportunity. So that's it. Pearl, this is that hyper liquid, this thing, I didn't know anything about it. I researched this on this day, and then EP9 million, it showed up. The gap was very minor. These are the kind of trades which are never going to show up in your EP scan because they are not going to meet that threshold of 10% gap. And then look at this. And then again, second time, look at this. So yeah. So there are a lot of, like Oracle, I traded 3 times in this move. First, second time, each time it was like an EP9 million.
Great. No, thank you so much. Pradeep, this has been fantastic. Thank you so much for sharing all your process and also the thinking behind the process and how to evolve as a trader. I think that's what's really important. And you put out a tweet, I don't know if it was today or in recent days, about how to get lucky trading and get luck on your favor. Would you mind kind of giving some advice around that, and maybe just advice for traders in general who are watching this, who want to improve, learn these setups, and evolve? Yeah.
So there is a he died a couple of years ago. There is a psychologist called Albert Bandura, and he is considered among the top 4 psychologists of all time in the world. He was a professor of psychology in Stanford, I think, University. And this guy studied human achievement. And he has this theory of what makes people successful. And that's the most widely acceptable theory about human achievement or what makes people successful. And he says that there are 2 elements to people's success in life. One of them is the self-efficacy beliefs, that is their own belief about their ability to perform a particular task or do something, right? And basically, but there is a second thing which is equally important. And the second thing is the chance events, which is something which is a fork or something which you didn't plan for, which is not like something completely random thing. And he gives his own life example that he was a Canadian, right? And he came to US to do accounting. He was in an accounting class, second year or something. He was in a second year of accounting class, and his friend invited him to go to bowling. So the friend had invited other people. So there was one girl he met there. He got smitten by that girl, and that girl was doing psychology. So in order to spend more time with her, he changed his major from accounting to psychology, and he went on to become the greatest psychologist of all time, kind of thing. So there are these chance events or lucky events, so he went on to study luck. And he came out to these chance events, or it's called a psychology. It's a very well-known psychological. I have some background in psychology, so I know this. It's one of the seminal paper in psychology, which is people's life change through some lucky event, some random this thing, right? And a person joins Stockbee sites and he sees the setup and he takes that and he goes on to make 100 million. That is lucky event, right? And it's not a planned thing, kind of a thing. So then the question is, how do we become lucky? And in order to become lucky, there is this theory called surface area of luck, or the more interaction you have, random interaction, the more the chance that you're going to get lucky. If you're going to be socializing and with only a set of people, or a lot of people I see on Twitter, people say, oh, just go and sit in a cave and you'll become a successful trader. For some one person it might happen, but it is not the way you can. You have to get lucky by talking, interacting with a lot of traders, talking to as many traders. I will give you an example of really, this is real life which has happened in the last couple of years. DEP, which I discussed with you, this is a setup, is not my original idea. Okay, and this is completely how luck happens and how serendipity or complete luck things happen. I was in Costco in the fruit aisle, and one woman comes running and says, "Are you Stockbee?" I said, "Yeah." Other people are looking, who is this guy, celebrity? She says, "Can I take a selfie with you?" I said, "Okay." And I was so embarrassed, right? Because other people are all looking at me. Who's this guy? Who's celebrity and who's come to Costco? She says, "I've been watching your video, this and that." And so I started talking to her. She said, "I've been trying to do this for 3 years, 4 years. I'm not successful. This is what is blah, blah, blah." So I said, "Okay, you're local, come to my office and we'll talk." So she came to the office and talked. Now she has 2 young kids and things like that and all. So she can only trade during a time period and all. So I said, you have to find something which will work for you. And because she is local, she just stays few miles from my house. Multiple times she and her husband, they both trade together now. They came and met me and we had a lot of discussions and things like that. And then we came to this conclusion saying that they can't really do this as a EP or something. So they should look for watch list and operate from a watch list. They went and came back to me after 3 months and said, "Hey, AJ, we have created this process called delayed reaction EP. We go through in the night, create a watch list, watch like this. We only have 3 stocks and we keep very close stop. And we made some 100% in last 3 months." like blown apart, right? And they gave me this whole idea. Now that became my setup. Now, what is the probability that you go to buy bananas and you meet some random person who wants to take selfie with you, and it ends up into an idea? And that couple have done very well. This happened 3 years ago. They are like, their performance is one of the best I've seen. Like, they're done like so good that if there is a next Market Wizard book, I will definitely recommend it. Then what is the probability of this? It's chance event, right? But if you have a surface area of luck, because I'm visible, I have a YouTube channel, random person meets me and changes things. So people should participate, go to talk to other traders, like go and attend some. I attended that conference in Las Vegas. I met most of these people who are in the Market Wizard book. I personally met them, right? And I could interact with them. So you learn so much by personal interaction, right? And somebody has a solution to your trading problem.
Yep. Excellent. Well, Pradeep, like I said, it's always a pleasure talking with you and learning from you. So thank you so much for all you share, both here on Twitter, on your site. We all appreciate it. So thank you so much for your time. To everybody watching, I hope you guys enjoyed immensely. Leave a like down below if you did. Subscribe if you're new to the channel. And Pradeep, thanks again, and we'll be right back. Cheers.